Hey everyone, today I wanted to take a few minutes and talk about how to determine profit targets on your trades and potentially even on your investment position. There's a few ways of doing it, of course. In fact, there's probably more than a few ways. I'm going to go through basically two of them here. A simple one, and this is just one that we actually currently still have in play, is on the S&P 500. What we did is we made a video, I think about a couple of weeks ago at this point, where we talked about the upside target for the S&P for this next leg higher being somewhere around between 4,700 and 4,800. And basically what we did is, and this is something you can do as well, of course, is take the distance between a previous trading range. In this case, it was the trading range between this high here and this low, and we added it on top of the breakout move here. And you can see if you simply take this range, copy it, added it on top of here, you get, in this case, a profit target of somewhere in the high or mid 4700s. Again, we're almost there. So that's a simple way of doing it. Another way of doing it is what we do in our market rover trend following algorithm, is what I think is quite a bit more powerful. And basically what we like to do there is we work for the average stock, we work with a first and second profit target. So we take some chips off the table and then we can work with basically free money or house money. And then you can let the rest rip with a trailing stop. There's variations of that you can do, of course, but just for example, you can see in the latest instance, when the market rover told us from a trending perspective to buy NVIDIA, trending is when the background goes green. You see it's been green all along. It still is green as of this recording. And just so you guys know, or I can show you this quickly, basically if all you would have done is buy NVIDIA when the market rover told you right here, black and white, very quickly, that it was going from bearish then to neutral and ultimately bullish in August of 2019, you'd be long the stock since then. You would now be sitting on around 650, 670% of profits, right? And if that's all you did, forget any trades along the way, right? These are trades along the way you could have done, but if all you did is buy it. So that's just what we do in the market rover. Now let's talk about the market rovers, the way we determine profit target 1 and 2. Basically what we've done a lot of work on this over the years, and we've determined that the average stock has a really good probability of reaching a profit target 1 and 2 if those profit targets are 3 and 5% above the entry point. Those profit targets, of course, are these little lines you can see on your screen. And so if we zoom in on the latest one here, you can see we got a buy signal on October 18th. Profit target 1 and 2 were reached very quickly, and the stock, of course, then has continued to rip. You can now start working with a trailing stop, right? So the trailing stop is actually this dotted line. So one of the great things about using target 1 and 2 is that if you take off a third and another third, then you can let the rest rip, and you're working basically with free money. You have a free trade if you want to look at it that way. And you can see, for example, in this example here, when we get a buy signal here, we had profit target 1 and 2. In this case, the stock basically flatlined after profit target 1 and 2, which is just fine. And then we got stopped out in the last third, still for profits, of course, because the trailing stop moved up, right? So in this case right now, obviously target 1 and 2 were reached, and the last third is still on until the trailing stop reaches it. So that's a great way of doing it. I hope this is helpful for you guys. If you have any questions or comments, let us know, and we'll see you again in the next video.